Have you ever wondered why some people rave about their financial advisor while others are adamant they should be avoided like the plague? The reason for this is actually pretty simple, but most people have no idea why, and they will never know. I'm going to hand you the blueprint to expose bad financial advisors and show you exactly what you need to do if you're wanting to hire the best advisor so you can enjoy retirement without having to worry about your money. Now, before you even consider talking with an advisor, you have to know exactly what you're looking for. Because this is a massive mistake that could not only cost you thousands, it could also cause you immense grief and frustration. And the solution is so incredibly simple, yet most people completely miss it. Ask yourself, what do I need and want help with? I've had prospective clients share with me that their advisor never calls them back. And when I ask them to send me their statements so I can take a look at what's going on, I see that they have an annuity and their advisor's name is on the statement. You might have said, I want help with retirement, and their solution to your problem was to sell you an annuity, and they went about their life. Why would they return your call when they already sold you something and have no obligation to answer your questions about retirement? So you need to be really specific about what you're looking for. Do you want help with a comprehensive retirement plan? Do you want help with tax strategies? Maybe you only want help in one specific area like investments, but you don't want your advisor digging into the bigger meaning of money in your life. So get really specific about what you're looking for and what you would expect from the advisor. But this is just the beginning, because even if you're crystal clear on what you want, there are red flags you can quickly identify and eliminate advisors immediately. You might be surprised to learn you could waste an immense amount of time thinking you found a great financial advisor because they have great marketing material or they have a slick website, only to be let down. The key is to understand these red flags to instantly cross people off your list. When you first start talking, typically through an initial call, is there even an opportunity to ask any questions or tell them about yourself? Or are they immediately trying to sell you something? If they are the ones doing all the talking and you can't even get a word in, imagine how bad it's going to be in the future. Another red flag is the expectation of blind trust. When you ask piercing questions about their capability to help you with your situation, are you given the just trust me treatment? It's probably time to move on then. Now you might be thinking to yourself, aren't you a financial advisor asking me to trust your advice on weeding out bad ones? And the honest truth is we're not the right fit for everyone, and we often tell people we aren't the right fit for them. As an example, we routinely have people who reach out who will tell me they want help with retirement, and through our process, we discovered that in reality, all they wanted help with is investment management. They don't want us reviewing their tax return for opportunities or looking at their estate plan for pitfalls in addition to investments. Because to them, it's not necessary. So the fee that we charge doesn't match the value that we would provide to them. And if they were to engage with us, they'd probably get a bit frustrated when we ask for a copy of their tax return each year, rather than having quarterly meetings simply reviewing their performance reports or get our opinion on the yield curve. A final red flag is they don't have any credentials. And the reason this is a red flag is that the barrier to entry in this industry is very low. Nearly anyone can call themselves a financial advisor. But credentials such as the CFP can show commitment to the industry and a level of knowledge and competence. This designation is widely regarded as the premier level of certification for financial planners, and they're required to pass a rigorous exam covering investments, taxes, retirement income planning, risk management, and even things like estate planning. They also must adhere to a strict code of ethics and participate in ongoing educational courses. And it can be a good idea to check and verify all this information by going to the CFP website and searching for that advisor to see if their license is in good standing. In addition, the investment business is heavily regulated and everything is reported to the SEC. You can look up an advisor's past history by going to advisorinfo.sec.gov. So for example, our CEO is Anthony Saffer. If you search him in the database, you can see his work history, for what firms, and if there were any disclosures or client complaints, they would be listed here. And obviously there aren't. Now let's dive deeper into the specific questions you can use to evaluate any firm you may consider hiring to help you with one of your biggest life decisions of retirement. Many fail to realize the importance of these questions until it's too late, and this is often when people have already hired a financial advisor only to find out that they aren't helping exactly the way that you need. And the secret is in these 7 questions everyone should ask a potential advisor or their current advisor. So the first question gets right to the punch. Are your recommendations in my best interest? In other words, are you a fiduciary? And when you ask this question, you're essentially saying, do you act in the best interest of your client at all times when providing financial advice and financial planning? And the answer you're looking for here is a resounding yes. There should be no hesitation, and it should not be answered in a roundabout way. You want a financial advisor that adheres to the fiduciary standard of care and nothing less. The second question is, will your recommendations be comprehensive or focused in one area? Most people want help with more than just investments. They want an advisor to be knowledgeable in many areas of finance and the ability to take complex topics and distill it down into the best and most actionable advice. When you ask this question, see how they respond. Do you get a generic response like, yes, we are very comprehensive? Or do you get specific examples like, yes, we want to look at your tax return every year so we have an understanding of what your current tax liability looks like and what your tax liability may look like in the future. And this will help us determine what tax strategies we could implement today to ideally reduce your tax bill in the future. The third question is, what will my total investment expense be? How much are you compensated? And where can I see this in writing? Now, I'm just gonna tell it to you straight. This question may make some financial advisors squirm, but you need to ask it. Nobody works for free. And if an advisor tells you that you don't pay them anything, it's time to run for the hills. You need to know exactly what you may pay and if it will be shown to you in a transparent manner. The reason this question is so powerful is because ultimately, it only makes sense to hire a financial advisor, or frankly, any professional for that matter, if the services they provide exceed the fees being charged. In other words, the time and effort saved plus the tax savings and potentially increased investment returns need to exceed the fee charged. Now, there are 4 other very important questions to ask, like, where do you keep my money and how can I see it? But I don't have time to go through the rest of these line by line in the video. You can grab a free copy of the 7 best questions to ask any financial advisor in the description down below. Because we genuinely believe people need good financial advice, and that starts with knowing what you want and asking the right questions. Because when you do that, you can weed out poor advisors and find the right advisors that are genuinely interested in helping you achieve your goals so you can maximize your return on life with the money you have. But you can know the right questions to ask, which will help you find a good advisor, but this still doesn't mean you'll understand what good financial advice looks like when it's presented to you. And if you've ever wondered what a comprehensive plan should look like to help you maximize your return on life and give you the confidence to rock retirement, then you'll want to watch this video right here, where my business partner Anthony breaks down a real financial plan for a couple in their early 60s with $2 million. Once again, this is Alex Okagawa, partner and advisor here at One Degree Advisors. And if you'd like help with your retirement plan, or if you'd like us to take a look at your situation, you can visit our website at onedegreeadvisors.com.